So day trading versus investing. Well, which one is right for you? We're going to break that down in today's video. Welcome to the Forexation YouTube channel. If you are new here, don't forget to subscribe and click that thumbs up. We cover investing, day trading, futures, and Forex markets on the weekly basis. New video, new content. And if you want some free training, go to theforexation.com or click that link down in the description to get access to our free 5-day boot camp. So let's get into the video. So obvious, we got to know what's the difference between the two. So what is day trading? Day trading is buying and selling within the same day, following short-term trends. So you're not worried about the overall trend of the market for the month, the year, decade, whatever it is, right? We're worried about today or maybe the week at most because we're in and out of trades so quick that we only need to know that short-term trend so we can get our profits and get out. We also heavily rely on technical analysis, so indicators, all that stuff, or you could simply use price action and manually mark up the charts, which I personally do myself. And most trades only last a few minutes, at most a couple hours. I would say on average, my trades on the short side, maybe 5-6 minutes. On the longer side, maybe 30 minutes to an hour. It just depends on the market. Sometimes I'm just sitting around and chop, waiting for price to make up its mind. And then those are my longer trades. But if I'm getting in right when price is ready to go, it's 5-10 minutes. So that's what I like about day trading. It's super quick. So what is investing? Well, this is something that you're going to be more focusing on buying assets that generate returns over a long period of time. So a lot of you probably know about retirement accounts, 401ks. Maybe you know someone in your family who bought a bunch of stock, 10, 20, 30, 40 years ago, and now because of that compound growth over time, if they had dividends or simply just that company itself grew into a much bigger company, they were able to profit from the assets they bought, aka stock. And usually on these, you start focusing on fundamental analysis. So you're more worried about the company, the financials, and basically the probability of this company growing over time. Or maybe it's one of those steady stocks that just kind of, waves up and down, but the dividends pay out very well and you have it set up so those dividends rebuy more stock, and that way it compounds over time, therefore giving you a profit in the long term. So most of these trades could be, a couple months or years. For me, when I do my investing, I'm worried about retirement, making sure I got all my money working for me. So when I decide I don't want to, teach you guys, I don't want to day trade, that all the money I put into my investment accounts will be able to pay for my life, and hopefully just the dividends will be able to be something I could live off of. So therefore I could keep those accounts running and pass them on so that generational wealth comes to my family going forward. So obviously there's pros and cons to both sides and both investing and day trading. So let's cover the pros. Well, the pro and the part that gets most people to start learning how to day trade and keeps us around in day trading is the high profits. So you're able to get in out of the markets, pull those profits, and basically pay yourself from trading. Therefore, you're able to do a full time as trading. So you want to be able to take advantage of these short term trends. Dogs got a little chew toy back there. So you want to take advantage of these short-term trends, and you're not too worried about finding that long-term trend and waiting for pullbacks to happen before you get back in on the trend. We are on the 1 minute, 5 minute chart, in and out. And this also leads to flexibility to trade around your schedule. So there's different sessions depending on what market you're trading. If you're doing Forex, you have the London, New York, Asian session. So you could trade at any time of the day. For me, because I'm doing futures, I really rely on just the New York and specifically the morning session. And then that frees up the rest of my day to work on content for videos like this, build PowerPoints, work on the website, or simply just enjoy life. And that's what I got into trading for, because I wanted to be able to start enjoying life more. And I like teaching, so I get makes me happy teaching people and sharing my knowledge. But then the actual day trading part helps me become free from a job and all that stuff. So the cons, there's got to be cons, right? Nothing is too good. What are you doing? Hey. All right. Hopefully you can stay put so we can finish this video. So the cons, high risk of losses. So because you're active in the charts almost every single day, multiple times a day, depending on how you're trading, you're going to have risk and open risk, because even though, say, the trend is up and you're right about that, these pullbacks and these long wicks that happen on the smaller time frame charts could put you out of a trade, therefore accepting a loss even though you were right that it was going up. And well, it requires a lot more time and attention. So for me, I'm reviewing the markets when I later on in the day, and then before the market open, I'm analyzing the charts, looking up the news, seeing what we have in store for the day so I could put a game plan together. Whereas for investing, you could kind of just find something that's going to be doing good in the long run, or dividends, or all that stuff. So we'll talk about that in the next slide. And then you need to know technical analysis. It's not something that you could just make up. You got to know what you're going to use, how you're going to use it together, and have that tell you the story of what the day is going to unfold, what's going to unfold for that day, so you could get in on your day trades. So investing, well, the pros for that is, you have a much more high potential for long-term growth. It lowers your risk of losses because you are not worried about pullbacks, because you are investing in the long term. Like I said, all my investing is for retirement, so I'm going to hang on to them for 10, 20 years, maybe 30 years, who knows. But I pick things that have a record of steady growth, pay dividends, and I'm able to reinvest the profits so I can get more shares and keep growing that account. This definitely requires less time and attention. So a lot of my long-term investing, I'm simply looking at the charts and just seeing the overall 5-year, 10-year, however long this has been going on for, seeing the overall growth. Has it been steady? What are the dividends? And after that, once I do that initial research, I'm just buying more and more as capital comes in, and it snowballs from there and just keeps on growing. And you really don't need to know technical knowledge, because, like I said, you're just quickly glancing at the charts. Is it going up? Is it going up steep? If it's going up steep, usually that's a sign a pullback's going to happen, or maybe it can't suffice that for long. But I like those gradual rising ones because that shows steady growth, and then I'm able to be more confident in that in the long run. What are the cons about investing? Well, you have a lower potential for profit. And what do I mean by this is you really are not paying yourself on a weekly, monthly basis with this. Now, depending on how you have it set up, all my dividends are reinvested right now. I'm not worried about getting paid out from dividends. I want this account to snowball and keep growing, even when I'm not putting in capital, which I do on a weekly basis. Longer time horizon to reach your goals, because you can't get that quick growth. You're looking for 5 to 8% a year, year after year after year. So that account just keeps snowballing bigger and bigger and bigger until you're actually able to live off of those dividends. And then you could consider yourself retired, right? And it's definitely not as flexible as day trading. So you can't just show up, trade, and get out. What I do is I deposit money every Friday. I figure out where I'm going to put that money for that week, look at my account real quick, and that's it. I'm not getting paid, right? So you don't have that flexibility to show up, make money, and get out. You're just adding more, adding more, adding more to make sure that it just snowballs. That's the name of the game with investing. You want to snowball it over time, be patient and consistent. So who is day trading better for? Well, for those who are more comfortable with risk, because there's going to be a risk day after day, you have more time to analyze charts daily. So it takes time to analyze the charts, and you need to actually put in the work to do this. And if you're looking to get day after day, week over week, month over month profits that you're able to pay yourself with, this is what day trading is good for. This is for active income and actually being able to pay yourself. So who is investing better for? This is where you want to grow your wealth over a long period of time without actively managing it. So this gives you low time needed to analyze the charts, manage your accounts. You're more focused on depositing more money, buying shares, and just letting it ride. This is going to help you get passive growth, and it's going to hedge against inflation, if not be profitable for you in the long run if you pick the right areas to invest in your portfolio. So for day traders, say you choose day trading, I have a message to you. Don't only day trade. If you don't show up to the charts, you are not making money. So therefore, you have to consistently day trade after day. But I always use a percentage of my profits to put into my long-term portfolio. This is the secret. So you use your day trade to kind of replace your job and grow an income. Then you want to make sure you're investing a percentage of that into your long-term accounts, so that account starts snowballing, and that will start getting bigger and bigger and bigger. And therefore, you have basically secured your future profits, because you'll be able to live off those dividends and the growth from the account if you played your cards right, deposit money consistently, and 10, 20, 30 years down the road, it's going to snowball into a much bigger account, and you'll be set. So if you choose to stop day trading and you don't want to do that anymore, you are covered with your long-term portfolio. This is going to consist of stocks, indexes, ETFs, mutual funds, and having some of it just sitting there in cash, just in case there's a big crash. You are ready to buy very discounted items and start building that portfolio again. When everyone's panicking, you're buying everything cheap because you know long term you have the confidence and you've overcome that fear that this is the perfect time to buy. I'm going to pay cheap. So when it does recover, I get the profit from the recovery and as well as the future growth. Now, keep in mind, nothing is permanent, or nothing is guaranteed. So you don't know it's going to recover and keep growing. But if you've done your fundamental analysis and you see that every time it has crashed in the past, it does recover and has that steady growth, you'll be more confident in your plays, and you'll be able to not worry when you keep putting more and more money into whatever your portfolio looks like, depending on how you divided it up. There's lots of strategies about that. We may cover one in the future videos, but for right now, we are more focused on day trading. So expect a lot more day trading content from us. And again, if you haven't already, click that subscribe button, thumbs up, and join our free 5-day bootcamp below. You'll learn how to read price action, start to understand it, and even start to get comfortable predicting where price is most likely to go, therefore making your day trading more consistent and profitable. Again, link below, absolutely free. We also have our trading journals. You can get that down below. It's for day traders if you want to journal, keep track of your data, your month, your week, and all that stuff. So thank you for watching. Glad you made it to the end. Hope you guys got a lot out of this. If you have any questions, you know what to do. Comment down below. We'll try our best to answer all the questions. And again, thank you for watching. Peace.